Tom Lee is encouraging all to buy the dip and believe that this is just an opportunity to pick up some of the strong Magnificent 7 stocks and still think that NVIDIA will do great in 2025. He also predicts that Bitcoin will hit 250,000 by year end. Stay until the end of this video and I will show you my exact strategy on how to properly invest into Bitcoin. Here's a quick video of Tom Lee explaining the reason to buy the dip. Let's take a look.
Free of the indecisive December choppiness that dropped the average stock by more than 6%. And what are the crucial catalysts to watch from here as January unfolds? Here to take on those questions is Fund Stretch Tom Lee, a CNBC contributor, of course. Tom, good to see you. Happy New Year.
Happy New Year to you.
So first off, Tom, what's your diagnosis of what the market's been contending with here in the last several weeks as we've gone sideways and had sort of this negative skew toward market breadth?
Markets kind of did flail into the end of last year and the first day of 2025. And I think it was trying to digest a few things, that the pretty dramatic move in long-term yields and the dramatic drop in yields in China. I think that there has been some concerns about macro as you saw some events over the past few days. And I think there was general profit taking and some sort of let's wait and see how 2025 is, given we just booked two 20% back-to-back years.
And do you think that those things will remain overhangs? I mean, obviously, you certainly have a bullish orientation. You feel as if the S&P 500 can get to 7,000 by mid-year before perhaps a pullback. Well, if we're getting from here to 7,000 in less than 6 months, you're talking about, 35% annualized pace of gain. So how do we get there?
Well, I think one thing the viewers need to keep in mind is that just because the calendar year changed doesn't mean that the strength that we saw throughout 2024 suddenly has evaporated. There are tailwinds building because the Fed is dovish, even if they're making fewer cuts. But I think one of the sort of two important things happening early in 2025 is going to be, one, we are seeing manufacturing recover. The ISM manufacturing, posted one of the highest readings in almost 2.5 years. I mean, it's been below 50 basically for nearly 3 years. And the second is that I think the labor market could be softening in a way, because whether you look at link-up data or the ISM employment, to tell us that the Fed now has to be focused back on supporting the economy. So I think this month could be quite decisive in the sense that we've got weakness because of some insecurities building, but I think it's, the same tailwinds are in place. I mean, I think it's still a buy the dip kind of market.
And in terms of perhaps the same themes being in place, does that mean that the leadership profile of the market you expect to stay similar to 2024? I mean, I know it's waxed and waned between mega cap growth leadership and then some broader participation, but we did finish again with dominance by the NASDAQ 100 type stocks.
Investors still are going to pay for earnings visibility, and that's why I think the Mag 7, including NVIDIA, are going to be important holdings. But financial conditions should ease this year. Easing financial conditions does allow some cyclicals to post better earnings growth, like financials and regional banks, industrials, and small caps. So I think that there should be a case for broadening of the markets this year. And then finally, I think in terms of risk appetite, still one of the good measures to look at how risk appetite is to look at something like Bitcoin, and at 97,000, it's still telling us that, this is still a risk-on market.
Yeah, I mean, obviously it's held almost all of its gains since that little poke above 100,000 in Bitcoin. Although I do wonder what you make of the relatively heavy outflow we were seeing in the BlackRock ETF that holds Bitcoin, whether it was just sort of deferred profit taking into a new tax year or something else.
It's hard to tell. And I think with the ETFs, it is creating, I think, an interesting dynamic, which is that someone who sells a BlackRock ETF doesn't have a 30-day holding period if they buy another Bitcoin ETF. So I think in some ways you can see people doing basis swaps and stepped up in tax optimization strategies and not really having to worry about that 30-day holding period.
Every time the Federal Reserve print more money, they depreciate the value of your dollar. So the money that you have saved continues to be worth less, decreasing your buying power. Bitcoin was designed to protect the average Joe from this. In order to protect my hard-earned money, I will be dollar cost averaging into Bitcoin for the next 10 years. Dollar cost averaging is the best way to not get shaken out with the type of volatility that Bitcoin has. So that's the best strategy on how you can properly invest into Bitcoin. This video was brought to you by Infinity Tax, so click on the link below for the free guide on how to pay zero in taxes. Thank you for tuning in. Don't forget to like and subscribe to the channel, guys, and see you next time.